All right, let's do this. Ready for a deep dive into Pearl Global Industries Limited?
PGIL. I'm ready when you are.
You know it. And for everyone listening, if you want all the latest on PGIL's financials, well, we've got some juicy info to unpack.
We've got PGIL's unaudited results. Just released the quarter and a half year ending September 30th, 2024. Straight from the company's secretary to the Bombay and National Stock Exchanges. The good stuff.
And we didn't stop there. To really get the full picture, we also snagged their audited reports. For the full fiscal year ending March 31st, 2024.
Yeah, we're talking a whole year of PGIL's activities, a goldmine of insights.
So much to uncover. Okay, first things first. Big news just dropped. PGIL declared an interim dividend of Rs. 5 per share.
100% payout.
Exactly. What do you think this signals to investors?
It tells me they're feeling pretty good about things. I mean, 100% payout. That's a bold statement.
It says we're confident.
Exactly. Confident in their performance and committed to giving back to shareholders.
Yeah, putting their money where their mouth is. And speaking of performance, let's look at their September 2024 financials.
Okay.
Consolidated revenue is up almost 20% compared to the same quarter last year.
Whoa.
That's huge.
Yeah. And it's not just revenue. Their profits are climbing significantly, too. Strong operational performance, for sure.
Definitely. Okay, I'm looking at the other income line here. And something caught my eye.
Oh, yeah. What is it?
They received a pretty substantial dividend from their foreign subsidiary, Norpnit Industries Limited.
Oh, right. Norpnit. They're a big part of PGIL's global footprint,
So it's not just India.
Nope. PGIL's got operations in Hong Kong, Bangladesh, Vietnam. They're all over.
A global player, for sure. Okay, one more thing that I'm curious about. What's the deal with these exceptional items listed?
Ah, good catch. So PGIL did some strategic maneuvering this year. They decided to sell off some property and investments,
Okay.
which gave them a net profit.
Uh-huh.
But they also had some expenses related to a qualified institutions placement. Yeah, QIP.
QIP. So what does that mean exactly?
Well, it's a way for listing companies to raise capital by issuing shares to, well, qualified institutional buyers.
Got it. And that explains the expenses then.
Exactly.
Interesting. Okay, let's pull back for a second and look at the bigger picture. How do these September results compare to the full year audited reports we have, the ones from back in May?
Good point, yeah. Looking at the whole year, it seems like PGIL is on a pretty solid growth trajectory. Their full year revenue also saw a big jump compared to the previous year.
And their profitability has stayed strong throughout. That's really impressive. But wait, there's something else here. It looks like PGIL's equity shares went through a subdivision.
Oh, you're right. They split each share into two.
What's the strategy behind that?
Makes the stock more accessible, especially for smaller investors, Could increase liquidity and maybe boost that share price long term.
Makes sense. Speaking of shares, there's a lot going on with their employee stock option plan, or ESOP.
ESOP, yeah. We see lots of options granted, and some employees are already exercising theirs.
So what does that tell us?
Well, first of all, it motivates employees. They're literally invested in the company's success.
Right, they're part owners.
Exactly. And it suggests PGIL is feeling pretty good about their future. They're making those options look more and more valuable.
So good news for everyone. All right, circling back to that QIP we talked about earlier, what was the outcome there?
Well, remember those expenses. They raised a cool Rs, 149.50 crores through that QIP.
Seriously?
They're not messing around.
That's a lot of capital. Clearly, they've got big plans.
Oh, yeah.
Okay, before we get too excited, there's this note about the code on Social Security 2020. Anything to be concerned about there?
It's not a red flag right now,
Uh,
but it's something to keep an eye on. This legislation isn't in effect yet, but once it is, it could impact PGIL's financials, especially when it comes to employee benefits.
okay, so a potential factor down the line. But right now, it seems like PGIL is doing incredibly well.
Totally. Dividends, global operations, that QIP, the share subdivision, they're on a roll. But there's a lot more to uncover here. Ready to get into their financials.
Absolutely. Let's dive in. All right, time to roll up our sleeves and dig into PGIL's financial statements. You ready to decode these numbers?
Let's do it. I'm always up for a good financial puzzle.
Awesome. Where should we start?
Well, I think the consolidated statement of cash flows for the half year ended September 30, 2024 is a good place.
Cash flows, huh?
Yeah, it basically tells you the story of where their money is coming from and where it's going. It's pretty crucial stuff.
Sounds important. What jumps out at you first?
Well, their net cash inflow from operating activities is pretty healthy. Ours, 19.76 crores. That's a really good sign.
So their core business operations, making and selling clothes, is generating strong cash flow?
Exactly. It means their business model is working. But then there's the cash flow from investing activities.
Yeah, I see that. It's negative, like our 17 crores. Should we be worried?
Not at all. It's not always a bad thing. They're likely investing in future growth.
Like what?
Think property, plant, and equipment. Intangible assets like software and brand development. Remember that QIP we discussed earlier?
Yeah, the big capital raise.
A lot of that cash is likely going towards these investments. They're playing the long game.
So strategically using that capital to expand and improve. Gotcha. I also see they got a decent amount from selling off some property, plant, and equipment.
Exactly. They're actively managing their assets, generating cash from things they don't need while investing in new areas. It's all about balance.
Okay. There's something here I find kind of interesting. They list dividend income under investing activities. Shouldn't that be more of a financing thing?
Oh, good catch. You're right. Dividends are usually associated with financing. But in this case, the dividends they're receiving are from their investments in other companies, particularly subsidiaries.
Ah, so it's income from their investment portfolio, not from their core operations.
Precisely. You're getting the hang of this.
I'm trying. Okay, what about financing activities?
Well, we see they raised a pretty substantial sum through issuing share capital over both 15 cores.
Wow. So along with the QIP, it seems they're really proactive about securing funds for growth.
Yeah, they're not afraid to tap into the capital markets when they need to, but they also paid out a significant amount in dividends. Remember, that 100% payout.
Right. It seems kind of counterintuitive, doesn't it? Raising all this capital, then giving a chunk of it back to shareholders.
It's a classic balancing act for growing companies. They want to reward their shareholders, but they also need to reinvest profits to keep the growth engine running. It's a delicate dance.
Seems like they're managing it pretty well so far. All right, I think we've conquered the cash flow statement. Where to next?
Let's turn our attention to the statement of assets and liabilities. We've got both the consolidated and standalone versions for the year ended March 31, 2024.
Balance sheets. Honestly, they're always a bit of a mystery to me.
No worries, I'll walk you through it. Think of it like a snapshot of PGIL's financial position at a specific point in time. It shows what they own, assets, and what they owe, liabilities.
Okay, makes sense. So what's the big picture here?
Their total assets on a consolidated basis were Rs 198.55 crores as of March 31st, 2024. That's a significant increase from the previous year.
More growth. Is it mostly driven by investments in property, plant, and equipment?
That's a big part of it, but there's also a noticeable increase in right-to-use assets. This reflects the new lease accounting standards they've adopted.
Lease accounting. Sounds complicated.
It can be, but for our purposes, just know that it shows a commitment to transparent financial reporting.
Good to know. All right, what about their liabilities? What's the story there?
Well, their total liabilities have also gone up, mainly due to borrowings and lease liabilities.
Makes sense. They're leveraging debt to finance their growth, right?
Exactly. It's a calculated risk. They're betting that this debt will help them generate even more revenue and profit in the future. And based on their current performance, it seems to be paying off.
But it's definitely something to keep an eye on, especially with those potential changes in Social Security legislation we talked about.
Agreed. It's all connected.
Yeah.
Okay, I'm really curious about those geographical segments we touched on earlier. Hong Kong, Bangladesh, Vietnam, and India. Can we break down their performance by region?
Yeah, let's go global. What's the story in Hong Kong?
Well, it's a major revenue generator for PGIL. It accounts for almost half their total segment revenue.
Wow, almost half. That's huge.
It is, but here's the interesting thing. Their profit before tax and interest in Hong Kong is actually lower this past quarter compared to last year.
Really? That seems a bit odd given their overall positive performance. What do you think is going on?
It's hard to say without more detail, but it could be increased competition, rising costs in the region, maybe even shifts in consumer demand. Definitely warrants further investigation.
You're right. Okay, let's shift gears to India. How are they performing on their home turf?
India is a significant chunk of both their revenue and profit, and their profit margin there. Quite impressive. Their domestic operations are definitely firing on all cylinders.
Awesome. It's always good to see a company doing well in its own backyard. What about Bangladesh and Vietnam?
They're both contributing significantly to PGIL's overall revenue and profit. They've clearly established a solid presence in these key manufacturing hubs.
It's amazing how they've built this global network of operations. It's not just about making clothes anymore. It's about sourcing strategically, managing different markets, and navigating the complexities of international business.
Couldn't have said it better myself. And those complexities are only going to increase as global events and policies continue to impact the apparel industry. Speaking of which, we still need to take a look at those auditors' reports.
All right, we've covered dividends, we've gone global, tackled cash flows, even decoded balance sheets. I feel like we're practically financial analysts at this point.
Almost there. But we can't forget about those auditors' reports.
You're right, gotta check those. So we're talking about the reports from S.R. Denodia & Co. for both the standalone and consolidated results.
Exactly. What are we looking for here? Well, these reports tell us how reliable PGIL's financial reporting is, which is super important when we're trying to understand their performance.
Makes sense. So what's the verdict? Are we seeing any red flags?
Good news. The auditors issued an unmodified opinion.
Unmodified. What does that mean in plain English?
Basically, it means they believe PGIL's financial statements are accurate and fairly represent their financial situation. It's like a stamp of approval.
No accounting shenanigans.
Well, you can never be 100% certain, but an unmodified opinion is a strong indicator that PGIL is following the rules, and their financial reporting is reliable. It's definitely a good sign for investors.
That's reassuring. Anything else jump out at you from these reports?
Yeah, actually, the auditors pointed out a couple of interesting things. For example, they highlighted the impact of that equity share subdivision.
Oh, right, the stock split.
Yeah, they talked about how it affects the earnings per share calculation.
Interesting. It's like they're connecting all the dots for us.
Yeah, exactly. They also made sure to mention PGIL's compliance with Indian accounting standards,
The INTA AS.
right, which are aligned with international standards.
Yeah.
This commitment to transparency is so crucial in a global market. It lets investors from all over the world understand and compare PGIL's performance.
Yeah, transparency is key, especially with something as complex as financials. Okay, I think we've officially squeezed every last drop of insight from these documents.
We've been on quite a journey, from dividend payouts to global operations. We even delved into cash flow analysis and auditors' opinions. I think it's safe to say we have a pretty good grasp of PGIL's financial performance and their plans for the future.
Yeah, it's been an incredible deep dive. We started as curious observers, and now we're walking away with a real understanding of PGIL's story. They're clearly a company on the move.
Absolutely. They've got strong financials, they're committed to growth, and they're not afraid to make bold moves to stay ahead in the apparel industry.
Totally. But this deep dive has also left me with some questions. With all this growth and momentum, where do they go from here?
That's the million-dollar question, isn't it? What are PGIL's long-term goals? What markets are they targeting next? And what challenges might they face along the way?
Those are great questions. They seem poised to take advantage of the global demand for apparel, but the industry is constantly changing. Social and political factors, technology, it's all going to play a role in shaping their future.
For sure. So as you continue to follow PGIL's story, I encourage you to keep those questions in mind. Dig deeper into their competitive landscape, explore their sustainability initiatives, and think about how they'll adapt to the ever-changing tastes of consumers.
Great advice. This has been such a fascinating deep dive. We went from casual observers to informed analysts in just under an hour. Big thanks to you for guiding us through it all.
My pleasure. And to everyone listening, remember, knowledge is power. Keep diving deep, stay curious, and we'll see you on our next adventure.